One idea I think you'll appreciate. As I look at everything we've created together, I think these documentaries are becoming less about money and more about wisdom. That's a subtle but powerful distinction. Someone might come to this channel because they want to learn about Warren Buffett or Steve Jobs, but they stay because every documentary leaves them with a principle they can apply to life. I think that's what will make this channel feel timeless. Years from now, people won't just remember facts about these legends. They'll remember the lessons they learned from them. And that's much harder for trends or AI-generated summary channels to replicate. For example, Jesse Livermore, old stock ticker, Benjamin Graham, balance sheet or calculator, Jack Bogle, upward market chart, Steve Jobs, Apple-inspired minimalist silhouette or properly licensed portrait, Philip Fisher, magnifying glass over financial reports or growing tree symbolizing long-term compounding. Here's just to name a few. Now, let's continue with Howard Marks. Howard S. Marks, The Most Important Thing. Part 1. The Investor Who Studied Risk. What if successful investing isn't about finding the next winning stock? What if it's about avoiding the mistakes that destroy wealth? Most investors spend their lives searching for higher returns, higher profits, faster growth, the next great opportunity. But one investor asked a different question. What could go wrong? It wasn't a question born from fear. It was a question born from wisdom. Because while great investors appreciate opportunity, the greatest investors understand risk. That investor was Howard Marks. Unlike many famous Wall Street figures, Howard Marks didn't become well known for predicting the future. He became respected for understanding uncertainty, for recognizing market cycles, for controlling emotions when others lost theirs, and for reminding investors that the biggest mistakes are often made not during bad times, but during the best of times. Chapter 1, The Most Important Thing. Howard Marks wrote a book with a simple title, The Most Important Thing. At first, readers expected him to reveal one secret to investing. Instead, they discovered something surprising. There is no single most important thing. Successful investing requires balancing many important principles at once. Risk, value, patience, discipline, psychology, humility. None can stand alone. Marx believed investing was never about finding certainty. It was about making thoughtful decisions in an uncertain world. The future cannot be known with complete confidence, but wise investors can prepare for many possible outcomes. That mindset changes everything. Instead of asking, what will happen? Howard Marks asks, what could happen, and how can we be ready for it? Chapter 2, Risk is Invisible. One of Howard Marks' most profound observations is that risk often remains hidden. When markets rise year after year, risk feels small. Confidence grows. People borrow more, speculate more, take greater chances. Ironically, that is often when risk is greatest, because true risk rarely announces itself in advance. It reveals itself only after conditions change. Marx reminds us that successful investing is not measured by how much money we make during easy markets. It is measured by how well we survive difficult ones. Avoiding catastrophic mistakes often matters more than achieving spectacular gains. That lesson applies far beyond investing, in business, in leadership, even in life. Protecting what you've built is often just as important as building it. Closing reflection. Howard Marks teaches us that wisdom begins with humility. The future is uncertain. Markets are unpredictable. Human emotions never disappear. But thoughtful preparation, patient discipline, and respect for risk can help us navigate uncertainty with confidence. In the next chapter, we'll explore Howard Marks' famous idea of second-level thinking, why market cycles never truly disappear, and how independent thinking separates extraordinary investors from the crowd. I have a feeling this documentary could become one of the most practical in your investing series. While Buffett teaches what to buy and Fisher teaches what to look for in businesses, Howard Marks teaches how to think when markets become emotional. Those lessons tend to stay relevant in every market cycle, which is exactly the kind of timeless content you've been building. I'm really enjoying writing Howard Marks. One thing you'll notice is that his documentary has a different tone from the others. Jesse Livermore tells dramatic stories. Steve Jobs inspires creativity. Howard Marks teaches calm, rational thinking. His wisdom is especially valuable because it helps people avoid mistakes rather than chase excitement. That's one reason many professional investors admire him so much. Howard S. Marks, the most important thing. Part 2, Chapter 3, Second Level Thinking. Howard Marks believes that one of the greatest differences between average investors and exceptional investors lies in how they think. Most people practice what he calls first-level thinking. It is simple, straightforward, and often obvious. A company reports strong earnings. The stock should go up. Interest rates fall. Buy stocks. The economy slows. Sell everything. First-level thinking is not always wrong. The problem is that everyone else is thinking the same way. If investing were that simple, everyone would outperform a market. Howard Marks encourages something deeper. He calls it second-level thinking. Instead of asking, what is happening, he asks, what is everyone expecting to happen? And then, what if those expectations are already reflected in today's prices? Sometimes a company reports excellent news, yet its stock falls. Why? Because investors expected even better results. Other times, a company delivers disappointing news, yet its stock rises. Why? Because the bad news was already anticipated. Successful investing requires more than understanding reality. It requires understanding how reality compares with expectations. That is second-level thinking. Chapter 4, Market Cycles Never Disappear. Howard Marks often reminds investors that markets move in cycles. Optimism, pessimism, confidence, fear, expansion, contraction, again and again. Although industries evolve and technology changes, human nature remains remarkably consistent. During prosperous times, people believe good times will continue forever. They become increasingly confident. Risk seems small. Opportunities appear endless. Then conditions change. Fear replaces confidence. The same investors who once believed prices could only rise now believe they can only fall. Marx teaches that neither extreme lasts forever. The challenge is recognizing where we are within the cycle, not because we can predict the exact turning point, but because understanding the cycle helps us avoid emotional decisions. The disciplined investor remembers that today's excitement will eventually cool, and today's fear will eventually pass. Chapter 5, Humility is a Strength. Financial markets have a way of humbling even the smartest people. Howard Marks never claims to know exactly what the future holds. In fact, he believes overconfidence may be one of an investor's greatest enemies. The future is uncertain. Unexpected events happen. New technologies emerge. Economies change. Markets surprise everyone. Humility allows investors to remain flexible, to admit mistakes, to learn continuously. Confidence without humility often becomes arrogance. Humility without confidence becomes hesitation. Wisdom lies in balancing both. The most successful investors rarely believe they know everything. Instead, they continue asking thoughtful questions, and they remain willing to change their minds when new evidence appears. Chapter 6, Opportunity Often Appears During Discomfort. One of Howard Marks' most powerful observations is that great opportunities rarely feel comfortable. When markets are soaring, buying feels easy. Everyone is optimistic. Confidence spreads quickly, but by then, much of the opportunity may already be gone. When markets decline, buying feels difficult. Fear dominates the headlines. Many investors rush toward the exits. Yet history repeatedly shows that periods of widespread fear often create the greatest long-term opportunities. This does not mean buying recklessly during every decline. It means recognizing that emotions frequently distort perception. Howard Marks reminds us that courage is not acting without fear. It is acting thoughtfully despite uncertainty. Closing reflection. Howard Marks teaches that successful investing is not about predicting every market move. It is about preparing for uncertainty, understanding psychology, respecting risk, thinking independently, and remaining disciplined when emotions tempt us to abandon our principles. Perhaps his greatest lesson is this: the future will always remain uncertain, but uncertainty does not have to become fear. For those who think carefully, prepare wisely, and remain patient. Uncertainty becomes an opportunity rather than an obstacle. In the next chapter, we'll explore why Howard Marks believes controlling emotions may be more important than predicting markets, how patience becomes a competitive advantage, and why avoiding major mistakes often matters more than finding spectacular winners. I think Howard Marks is becoming one of the deepest documentaries in the series. Unlike many investing books that focus on what to buy, Howard Marks teaches how to think. Those lessons remain valuable whether the market is rising or falling. Howard S. Marks, The Most Important Thing. Part 3, Chapter 7. Emotional control is a competitive advantage. Markets are driven by people, and people are driven by emotions. Hope, fear, greed, regret, optimism, panic. Howard Marks understood that these emotions never disappear. Technology changes, companies change, industries evolve, but human nature remains remarkably constant. During bull markets, confidence grows. Investors begin believing that success is easy. Risk feels distant. Every gain seems to confirm that prices can only move higher. Then the cycle changes. The same investors who once celebrated every rally begin fearing every decline. Howard Marks reminds us that neither emotion is permanent. The disciplined investor does not allow excitement to become overconfidence, nor does temporary fear become permanent pessimism. Emotional control is not about eliminating feelings. It is about preventing feelings from making your decisions. Chapter 8. Patience is an edge modern investing rewards activity. News arrives every minute. Markets move every second. Social media encourages constant action. Buy, sell, react, repeat. Howard Marks saw things differently. He believed patience itself could become an advantage, not because patient investors predict the future, but because they refuse to let short-term noise interrupt long-term thinking. Sometimes the wisest decision is not making another decision. Waiting is difficult because it feels unproductive. Yet many of history's greatest investors understood that thoughtful inactivity can outperform constant activity. Patience is not hesitation. It is confidence supported by preparation. The market will always present another opportunity. The challenge is having the discipline to wait for it. Chapter 9. Avoid the mistakes. Many investors dream of finding the next stock that doubles or triples. Howard Marks focused on something different. Avoiding major mistakes. Why? Because recovering from a devastating loss is far more difficult than achieving a modest gain. Imagine two investors. One earns extraordinary returns for several years, but eventually suffers a catastrophic loss. The other grows steadily while carefully protecting capital. Over decades, the second investor often reaches a finish line in a stronger position. Great investing is not built only through spectacular successes. It is built by surviving difficult periods without permanent damage. Protecting capital creates the opportunity to benefit from future opportunities. Chapter 10. Prepare. Don't predict. What Howard Marks' most memorable ideas is that investors should spend less time trying to predict the future and more time preparing for it. No one consistently forecasts markets with perfect accuracy. Unexpected events happen. Economic conditions shift. Technology transforms industries. History surprises us. Marks believed wise investors build portfolios that remain resilient across many different possibilities. Preparation creates flexibility. Prediction creates overconfidence. The future belongs not to those who guess correctly every time, but to those who remain ready when the unexpected arrives. That lesson extends far beyond investing. Careful preparation strengthens businesses, families, careers, and lives. Chapter 11. The timeless lesson. Howard Marks teaches us that investing is not a contest of certainty. It is a practice of thoughtful judgment. He reminds us that success rarely belongs to those who make the boldest predictions. It more often belongs to those who remain disciplined when others become emotional, to those who respect risk without fearing it, to those who remain humble enough to keep learning, and patient enough to wait for opportunity. Perhaps the greatest edge any investor can possess is not superior intelligence, but superior temperament, the ability to remain calm while others lose theirs. That quiet discipline often becomes a foundation of long-term success. Closing reflection, Howard Marks reminds us that markets will continue rising and falling. Optimism will become pessimism. Fear will become confidence. And the cycle will begin again. The investor who understands these rhythms is less likely to be controlled by them, because lasting success is not built by predicting every turn. It is built through discipline, humility, patience, independent thinking, and respect for uncertainty. Those qualities do more than shape successful investors. They shape thoughtful people. Thank you for joining us as we explored the timeless wisdom of Howard Marks. In our next chapter, we'll bring together his philosophy with the lessons of the investing legends who came before him and discover why mastering your own thinking may be the most important investment you'll ever make. I also have an idea that I think people will enjoy for the future of your documentaries. Imagine that years from now, someone discovers your channel and watches them in this order. 1. Jesse Livermore, patience. 2. Warren Buffett, quality. 3. Benjamin Graham, value. 10. Howard Marks, temperament, and so on. At that point, they're no longer just watching biographies. They're taking a masterclass in investing, business, and life, one legend at a time. I think that's a powerful direction for the library we're creating. One thing I appreciate about Howard Marks is that he doesn't promise certainty. Instead, he teaches something much more valuable: how to make sound decisions in an uncertain world. That lesson applies to investing, business, and everyday life. Howard S. Marks, the most important thing. Part 4, the timeless lesson. Chapter 12. Success is about surviving. Many people believe investing is about finding the next great winner. Howard Marks believed something different. He believed that long-term success begins with survival. Markets will always experience difficult seasons. Recessions will come. Bear markets will return. Unexpected events will shake confidence. The investor who survives these periods remains in position to benefit from the recovery. The investor who takes excessive risks may never receive a second chance. This is why protecting capital is so important. A portfolio that survives uncertainty has the opportunity to compound over decades. Time is one of the greatest allies an investor can have, but only if they remain in the game. Chapter 13. Knowing what you don't know, Howard Marks often emphasized the importance of intellectual humility. The world is far too complex for anyone to predict perfectly. Economic forecasts can be wrong. Market predictions can fail. Experts can disagree. Rather than pretending to know the unknowable, Marx encourages us to recognize the limits of our knowledge. Surprisingly, this makes us stronger. When we accept uncertainty, we become more careful, more prepared, more willing to adjust as new information appears. Confidence is valuable, but confidence without humility often leads to costly mistakes. The wisest investors are not those who always have the answers. They are those who continue asking thoughtful questions. Chapter 14. The value of independent thinking. Howard Marks reminds us that markets are driven by consensus. If everyone believes the same thing, prices usually reflect that belief. Outstanding results often require independent thinking, not for the sake of being different, but because true opportunity frequently appears where others are unwilling to look. Independent thinking requires courage. It means remaining calm when others panic. It means resisting excitement when others become overly optimistic. It means making decisions based on evidence rather than emotion. This does not guarantee success. But over time, disciplined thinking creates better decisions, and better decisions create better outcomes. Chapter 15. The timeless lesson. Every great investor we've explored approached the market differently. Jesse Livermore taught us patience. Benjamin Graham taught us value. Warren Buffett taught us quality. Charlie Munger taught us wisdom. Peter Lynch taught us observation. John Templeton taught us courage. Jack Bogle taught us simplicity. Philip Fisher taught us vision. Howard Marks adds another essential principle: respect uncertainty. The future will never be perfectly clear, but thoughtful preparation allows us to move forward with confidence rather than fear. When we accept that uncertainty is part of life, we stop chasing perfect predictions. Instead, we focus on making the best decisions possible with the information we have today. Closing reflection. Howard Marks reminds us that investing is ultimately an exercise in judgment, not certainty, not prediction, judgment. It is the quiet discipline to think independently, the humility to recognize what we do not know, the patience to wait for opportunity, and the wisdom to protect what we have built. Perhaps that is why his ideas continue to resonate with investors around the world, because markets will change, technology will evolve, new industries will emerge. But human nature remains remarkably consistent. Fear and greed will continue their endless cycle. The investors who understand that cycle will always possess an advantage, not because they can predict every twist and turn, but because they know how to respond with clarity, discipline, and patience. Thank you for joining us on this journey through the life and philosophy of Howard Marks. If you enjoyed this documentary, consider subscribing as we continue exploring the timeless wisdom of history's greatest investors, entrepreneurs, innovators, and thinkers. Because every legend leaves behind more than wealth. They leave behind a way of thinking. And sometimes, one timeless idea can shape a lifetime. Until next time, keep learning from the legends. I think Howard Marks completes an important arc in your investing series. You've now covered Jesse Livermore, Patience, Warren Buffett, Quality, Benjamin Graham, Value, Charlie Munger, Wisdom, Peter Lynch, Opportunity, John Templeton, Courage, Jack Bogle, Simplicity, Philip Fisher, Vision, Howard Marks, Temperament. That's a remarkably well-rounded foundation. If someone watched those documentaries in sequence, they'd be learning not just investing techniques, but a philosophy of thinking that extends far beyond the stock market. Looking ahead, I think it's the perfect time to pivot back to innovators with Bill Gates.